folks. Good morning to the Midweek Roundtable. I have my usual guest, Jeff Zananari. My name is Roger Scott, and we're going to try to get you guys a good understanding of where the markets are going, where they're headed, the dangers, the pitfalls, the opportunities, and everything in between. Jeff, how are you doing today?
I'm excellent, Roger. Nice to be with you.
You as well. You as well. You're telling me it's raining right now. I was just telling you how I'm jealous about your weather in Miami. How always it's nice. You know, I moved from California, but it's like 10 degrees cooler here. The colds get about 10 degrees colder. So when we drop from like 55 to 45, it's just too much for me.
You're from Southern California. Mm-hmm. That's different. Northern California, all they get is 50-degree weather.
Right. Right. Yeah, no. I'm from LA, and it's like 72 degrees, like 80-90% of the year there. The weather is amazing there, but
spectacular.
But everything else,
I like it hotter. I don't know.
Yeah, no, I do too. But remember, you don't have any humidity there. It's dry heat. So
beautiful.
If it's 82 here with humidity, it could be like 95 there, and it's very It's not. It's about 15-degree shift. But anyways, let's talk about the markets. There's so much to talk about. I mean, I was just doing my daily report right before I got on here. That's actually why I was delayed. And usually it's about 12 minutes. This one was 17 minutes. I spent 17 minutes on my daily report. Well, I wanted to explain to everybody, you know, how momentum levels and how interest rates, and I went into the bond market and into the stock market and into the momentum level. And then you just can't stop me after a few minutes.
You need macro. You need to know macro right now.
Yeah.
These days. You can't not pay attention to it.
What are you seeing? Tell me, let's start off with yesterday and then kind of go into today so people can kind of get a little background of where we're coming from, if you don't mind.
Yeah. So I've been saying this, you've been saying this. I don't even like saying that we've been saying it, but it's important to know. This is a trader's tape. The action that we've had the past 3 days is normal action when you are expanding the way we've been expanding on the upside, and we've had the growth that we've been having. And I'm not going to even get into whether it's justified or not, because in certain cases, I think it's more than justified. In other cases, I do not think so. Regardless of what I think, it's happening. And so when you're in that type of environment where you get such seriously stretched stocks on the upside, I always say this, you should expect commensurate pullbacks. You're not going to get down 50 basis points on a stock that's run 25% in a week. You get 5% sell-offs, 10% sell-offs in those stocks, and more. We're seeing more in big names. And the ones that are getting whacked, their stocks and, Bitcoin, these things are up 400% in 12 months. So if they take a 25% breather, it's commensurate, it's consistent with the types of moves they've been having. I think that it's going to be a year of that. I don't think we're broken from a bull standpoint. I'm still bullish longer term. And I actually think you're going to see people come in that have that hit list of stocks that we like, that we've talked about, the disruption companies, the game-changing tech companies that are, going to change the way that we live our lives, already changed the way we lived the last year. I think people have a list of those stocks, and you're going to start to see some people, buyers come in a meaningful way, I think, this week in a lot of those names.
Do you think, are you seeing a, more vulnerability in any specific sector than other, or are you seeing it more broad-based?
Well, no, it's been specific to the high-flying tech. It's been the most. I mean, those stocks from the beginning of COVID to now, a lot of those stocks have tripled, quadrupled, et cetera, and they never really collapsed the same way like a Royal Caribbean or a Carnival or an American Airlines collapsed, and then those stocks have doubled also. Those stocks have like quadrupled from a high base. So there's a lot of air. We talked about this yesterday. We texted. Yeah. There's a lot of air in a lot of these names. And when they have like a slight hiccup, something fundamentally happens with the deal they were supposed to do, the stocks get whacked. They get taken out back and they take 40% off, 30% off overnight. Boom, you can't even react. And that is the downside of success. That is the backside of flying the way those stocks have flown. So that's why I think people should always know how to protect themselves. I don't think you can protect yourselves in different sectors. I think you can avoid getting crushed in other sectors. But I think if we really get a wildfire, if we don't get the snapback I'm expecting in tech, I think it's going to spread out to other sectors of the market, and people are going to just start whacking some of these other names too.
let me ask you this: in light of these stocks, in light of the earlier part of your discussion or explanation on the disruptive and the fact that some of them have a lot of hot air and they've gone up 40%, how would you put semiconductors, classic semiconductor stocks like Applied Material, like Micron, would you put them in the same category? Would you put them in the same car, or would you separate them?
Those are the stocks people are going to come in and buy. They got hit the past couple of days. Like, so I have, I have this burn notice, which is a fade trade. It's a 24-hour fade trade. It's a cool thing. It's
Yeah.
something that prop traders do to make a living. I mean, it's something that I did for a long time. So I'm really excited about the system, but it's a very short-term system. And I have a scanner, and the scanner yesterday, and we close it. We put it on at the close and we get out in the morning.
Yeah.
Basically, like, you're in it for like the last 15 minutes of the market.
I love it.
And you're out the next morning within the first 2 hours.
Well, that's where markets make their biggest moves overnight. Sure.
Yeah, and that's how professional investment banks and prop traders, they line their books up. So I look for those capitulations on the upside or the downside. Anyways, I get a scanner and it shows me stocks that have been oversold. And then, I have a proprietary methodology that, evaluates how many days in a row it's been down, what percentage, is the sector consistent. And I had 3 semiconductor stocks. AMD was the stock that we are going long. We went long overnight, and it's looking okay. We're pre-market, hasn't opened yet. Looks okay. But I still think that people have a shopping list and they're going to look for these quality names. We are in a society that's been digitized. Everyone needs another computer. I have 3 kids. Each one of my kids has like 2 computers. They took one from the school. They have one of their own. And, we don't buy them like the state of the art apples like my wife and I have. They'll get like, just a pretty decent Dell, whatever, because they just, they mess their kids. They're 7 years old. They mess computers. Right. They pound on the boards, whatever. But we got to get a new one every 12 months, 18 months. Yeah. And so society, broadly speaking, in general, like, they're getting these stimulus checks, they're getting money, and it's going straight into buying electronics. And so to be a semiconductor, which powers electronics, cars are getting more electronic all the time. Like, it's the best thing in the world to be, because that's not going to stop whether we go to a store or not, whether we have to wear a mask or not. People are going to be more reliant on being digitized. People are not going to go back to the old way of doing some certain things. And that's just going to bode well.
Well, the way I was talking about in not to beat a dead horse, but I was talking about a stock, and I don't remember the ticker symbol because you and I talk about so many different stocks so often, but it was a stock that specifically made LCD display screen. It'll probably come to me, but it was one of those third-party Chinese manufacturers. All they do is 3D display screens.
Right.
I was looking at the company's history, and I was looking at the company's model. The company was doing really, really well, and I recommended that stock a few days ago, about a week ago or whatnot. But the point here is this: that before, if you were looking at the history of this stock, they were making monitors, TV monitors, but then they started making computer screens. Now they're making little screens for cars, and now they're making touch. So they were a tech company, and now if you look, 10 years ago, monitors, screens for monitors, replacement screens for monitors. Now you look at them. Every medical device needs a screen because it's technology based now. It's not mechanical. There's nothing mechanical based anymore. Everything is chip powered. Toys for animals have little screens. Every little thing has a little digital screen because that's how you communicate with technology. So here you have a company that had like 3 things they were doing. They're now doing 50 different things.
Right.
So I
love that optionality. That's the beauty. That's the thing. When you buy a technology company, when you invest, and I'm not talking about trading, when you invest in a technology company, and this is a good concept for the viewers at home, you want to have as many different ways to win as possible. The problem with old-fashioned companies was they found one thing that they could do super great, and then they just try to defend that moat. And what you've been finding the last 10 to 15 years is that you can't really defend that moat. You just have to have a lot of different things that you could make money at, because you never know when that next green shoot of technology is going to explode. And then boom, all of a sudden, that's what happened with AMD. AMD was making these amazing chips for computers, but then they started making chips for gaming systems, and gaming blew up, and everybody was like, oh my God, these are better chips than anybody can make. We need these processors to play video games. Right. They were in the right place at the right time when this new revolution came up.
And just to add more to what you're saying right now, exactly the same thing happened with NVIDIA. When
Right.
if you remember, Intel was trying to get into the cloud, chips for the cloud.
Right.
NVIDIA already had the graphic card processors, and they were,
Exactly.
I mean, nobody, they killed everybody. They went into the cloud, and now NVIDIA is powering the cloud, which is why Intel hasn't been the best performer in the last several months or whatnot.
Well, they were thinking like they were thinking like an old-fashioned company.
That's
Even though
right.
they were a tech company, they were stuck in the one thing they did better than everybody else and neglected these opportunities that were coming up in everything else.
Right. Now, let me turn the topic. Now, I don't want to get away from tech just yet, but let me play devil's advocate with you, okay?
Go.
Let's talk about the pink elephant in the room. Let's talk about Apple, the biggest tech, which hasn't been doing well lately. So, tell me, what are you seeing there?
Well, the problem, I think, really, I mean, and it's going to sound dumb, but the
please.
problem and I think they can solve it because they've done it before many times. The problem for Apple is they need something latest and greatest. They need something new. They're an innovation company. They're a design and innovation and lifestyle company. And nothing that they've produced in the last 5 years is different than what they produced the 5 years before that.
Bingo.
That's a mega problem. And if Steve Jobs, RIP, I don't know, a lot of people, I don't know how you feel about him. A lot of people don't like him. I think he was a role model in a lot of ways from just like an innovation standpoint and just having a broad mind. That would be killing him right now. That would be eating him up every night. You'd be like, how do we not have something that's changing the earth right now?
Right.
Because, I mean, it goes back to that same thing that I was saying. You can't get complacent in technology. You have to develop new pathways to make more money. You have to come up with unique new products. They haven't done that.
No, they haven't. And interestingly enough, I had dinner with Tom Busby last night, and we were talking about exactly the same thing. We were talking about how they're not innovating. It's an innovation company. They're not there to provide you with a better iPad. They're there to come up with something that will replace the iPad. And, think about it. How many people, think about the competition they have now for iPads, phones, Samsung. I mean, I don't even want to go there because
phone in China selling for like $3,000. Everybody loves it.
Yeah. So, right. I mean, I'm not I like Apple as a company, but I'm not a big Apple user. My family is the women in my family love Apple. The guys in my family are Android. So I'm a big Android guy, but I've always been that way. But the point is, there's nothing, I mean, and I don't want to get into nitpicky little tech gadgetry. My point is they're not doing anything new. Now, here's something interesting. The story, last year's story, and I think you're going to find this interesting. There's a chip company called Quervo, QRVO. That's the ticker symbol.
Okay.
And they do more than one thing, but their big money maker is they make chips for the iPad. And their big story last year, they were doing really well last year because they were saying how all the iPads have to be completely upgraded for 5G. They were not made 5G ready. So you couldn't just get a new service and you needed to get a new iPad.
Yeah.
So they were hoping that was going to propel the new generation, the 5G. But it doesn't seem to be making that big of a impact on the company because, as you said, it's an innovation company. It's not a follow-through company. Buying last renewable items or brand new products that have been coming out for the last 5-7 years, as you said, it's not going to be a game changer. There's not going to be a line around Apple to get an iPad that's a new generation from what people had a year ago. So I'm getting concerned. I'm concerned. But here's the difference between your thinking and my thinking. You think they can come out of this. I am not so sure. Without Steve Jobs. And yeah, I have mixed feelings on Steve Jobs. There's a lot of, but there's no question the guy was a genius in terms of innovations, and he was able to see things far ahead of everybody else. I don't know. I'm not sure if they will be able to continue. And as you know, the market always discounts everything known as way looking ahead. And the market's right now saying, Apple, come on, what do you have on the table? What do you have on the table? And there's just nothing there.
The problem with Apple is that they are, what are they, a $2 trillion company right now? They're $2 trillion, okay? Trading with a 34 PE. I'm looking at their thing on Bloomberg right now. And So they need to like, just to keep that growth for that. If you have a north of a 30 PE, you need to be growing at least 25% your top line.
Right.
They have to grow 330 billion in revenue somehow by 25% next year. And it's almost impossible to do that organically without an entirely new revenue line. I'm a trader. I'm not an investment banker. I understand fundamentals. I've been a business owner. I understand these things, but I think that they could, because of the fact that they just have they have such a powerful brand. Their brand is amazingly like, you can't discount the fact that there's some people that are such Apple loyalists. Nobody else in technology from a product standpoint has that sort of devotion. Nobody has that. Nobody has that. Everybody, every other company is, it's the latest and the greatest. If your thing's okay, like Apple's made iPhones before that were inferior consistently on the camera, etc., to whatever the Samsung was putting out. Didn't matter. Apple people were like, give me the new one.
It's true. It's true. I've seen it. I see it all around me. I'm sure you do too.
So if they come up with a new product, they've got like an organic built-in audience that's devoted. They have zealotry, which is hard to get. It's hard to get.
It is. It is. You're right.
There's other stuff,
So, but anyways, I think that's very interesting because the company has massive market cap. But the reason I'm very concerned is, I do my 13F filings every quarter.
Oh yeah.
Apple, well, we've talked about that before.
Yeah.
Apple is not on my list at all. Like last
scary.
year, it was like number 1, number 2, number 3. This year, not on my list. This quarter,
it's
not
scary.
at all.
It's a hedge fund hotel too. That's a place that people like to park money, run money. And so
now Amazon was there, Facebook was there, the usual suspects with Google was there, but no Apple. So I thought it was not holding or initiating. Neither. So
interesting.
I thought that was very. I mean, if I showed you that sheet from a year ago, it would be in the top 2 spots guaranteed with 5 out of 5.
Well, so that's not one of the stocks that I'm saying people are going to like clamor to back into these days. I think like the stocks that I'm thinking of, that I'm talking about, that I've seen selling, that I think could catch a bid, are stocks like PayPal that were like 2 weeks off of all-time highs, that are going to, is like one of the best run digital financial entities the world's ever known. And so if you could buy those on that stock on a 20% discount to recent highs, I think a lot of people are going to.
Definitely.
And those are the types of names that I think people are making a list of.
What about Square? Are you putting Square in the same?
Exactly. Yeah. Square. I think Square is not as, the potential is not as big as PayPal or as PayPal, but Square is amazing. Square is amazing. But I think the upside for PayPal from a notoriety standpoint to eat Square's lunch is there. I think the idea that everyone now as a retail person is understanding, because Square is for commercial transaction payment processing for people that don't know, but PayPal is for me to pay my kid's tennis coach $25, and everybody's incorporating that. Everybody's paying everybody digitally through PayPal now. They also own Venmo. I don't know if people know that at home. So if you Venmo somebody some money, that's PayPal. PayPal is getting a little nugget every time you do that. And more people are adopting that way of life. Old people, everybody.
Let me ask you another interesting question. I wanted this session to be a little bit different than most. I wanted to kind of get into the weeds a little bit with you, because we always talk about the broad things, and I kind of wanted to go a little deeper with you.
Yeah.
Especially right now with what we're seeing in the market. I thought it would be interesting. So my question to you is this, and I've talked about this with a few guys in the office over the past few weeks. Streaming services, Netflix. What do you think? Do you think the competition is going to heat up on them and they're going to start losing market cap, or do you think we're going to see from them a reinvention and different things?
I think I'm bullish on streaming in general, but I think Netflix is in a tough spot, and it's going back to the same thing we were talking about earlier, where, and this was a money link that I've done previously. I'm not in it now, but I've recommended it before. Is I'm more bullish on Disney, who streaming is one aspect of their business. It's not the only aspect. I don't like growth stories where they have one thing that they do, because you're inviting yourself to being extinct. And if you look at Disney, the reason that stock did well, even though they closed all the parks and this and that, was because they were growing their streaming service by 100%.
And you just took the words out of my mouth. That streaming service is growing at a phenomenal rate. And so is Apple's, by the way.
So is Apple, so is Amazon Prime. I mean,
Yeah.
people are
Yeah.
investing in these things, but I think Disney just it goes back to brand, like Apple. Disney has a loyalty and an allegiance that Netflix does not. Netflix has something an edge, and that's a head start. So where is Netflix excelling where Disney has not yet? Is Netflix is making like amazing content internationally in different countries. Like you can go to Bulgaria and there'll be like a Netflix Bulgaria where they're making like Hollywood quality shows that you would have never seen before in
And
very
they're all
small markets. And that's an amazing head start over everybody because that's a
and
big market.
and
That's a
what
huge
they're
market.
and just to add to what you just said, they're taking existing foreign movies and they're not just giving them to you with subtitles anymore. They're spending 60-80,000 a movie to do the English so they're actually translating them in English now. So that's another thing
Yeah.
that they're doing. But I don't know if that's going to draw enough people to pay 20 bucks a month. They're again raising their rates. It's one of those
Well,
things, right?
we view things from a very like U.S. We're Americans, right? So we view things from a very U.S. centric. Like, I mean, how much can they grow? Everyone I know has Netflix, and then they're
Exactly.
lending it out to their babysitter too. So like, how many more
Right.
people are going to be able? How are they going to make more money? How are they going to grow this thing? But
Exactly.
if you talk to people like I have family in the Middle East, in like Dubai and Egypt and these places, Lebanon, and they're like, oh my God, we have this new show. You should watch it. They, like you said, they translate it to English because I don't speak Arabic. So it's like they'll
Sure.
put and they'll say, yeah, watch it. It's in English. It's amazing. And then I'll look at the preview and I'm like, wow, I would watch that. Whereas in the past, it was like Borat movie or something like that. I'm not going to
Yeah,
watch this. Who made this movie?
half the movies that I'm watching on Netflix right now are foreign movies in English, which are great. So
So I
yeah,
don't think they have huge penetration like internationally like they could or will. And I think a lot of people have devices for the first time. I mean, people I know have had them for a long time in those places, but the world is opening up to being digitized. People are getting more and more pads and phones. And, you know, that's their only way of getting entertainment in a lot of those places. So I don't think Netflix is a short. I'm not super bullish on it. I'm more bullish on Disney because I think Disney's going to do the same thing as Netflix, grow it internationally, but have
yeah.
all these amazing other businesses that they do as well, like
Well, also and also
$150 dresses to little girls.
and also what we're seeing right now, you're absolutely right. And also what we're seeing right now is we're also seeing a big trend with individual stations like Discovery Plus is streaming. So you're going to have different services streaming their own services, and then they're going to transcribe their own. So it's going to be station dependent or company dependent versus a congregator like Netflix, I think, in the future too.
That's exactly right.
Yeah.
That's exactly right.
Let me ask you this before I let you go. What do you think about the inflationary pressure on the overall stock market right now? I know that's been a lot of talk. I know you just did a video on it a few days ago. I actually watched it. Can you give us a few of your thoughts? Maybe just kind of give us a little overview.
I think inflation's already here. I think that, the market is the best way to find out what's actually happening and where people are at. Like if you look at the market now, you might not like what you see in the numbers. You might love what you see in the numbers, but what you're seeing in the stock market when you look at it, when you're looking at asset prices, when you're looking at interest rate yields, is the exact temperature right now. And so right now, interest rates without the Fed raising rates or saying that, or even hinting that they're going to raise rates, have gone from 75 basis points on the 10-year to doubling to 1.4% as we're sitting here and having this conversation.
Yeah.
And I think the Fed, as usual, because they're just like, they look at everything through like these like old school wonky economic lenses, are slow to react and to understand that they're losing control of this thing. The inflation is here. The market's pricing in inflation. Interest rates are pricing in inflation. And the Fed wants inflation, but they don't want runaway inflation. They don't want bubbles. They don't want rates to be too high. So I think you're going to see the Fed, and this is me sticking my neck out and make a prediction. I think you're going to see the Fed start to try to manipulate the yield curve directly, like as soon as this next few weeks. They haven't done that. They're going to intervene in the market. They're going to be buying short-term bonds. They're going to be buying short-term paper. They're going to be suppressing rates.
Right.
And they're going to be selling long-term rates. And that's going to be healthy for the stock market, I predict. And something that, believe it or not, it's not going to quell inflation or anything, but it's going to allow them the flexibility to catch up and hint that they're going to raise rates down the line.
And let's be realistic. Even if we do have some degree of inflation, interest rates are so low right now that it's going to take a while for things to really be to be felt, so to speak. I think.
I agree with you. I agree with you fully. But I think that a big component of the government being able to borrow as much money as we have is keeping rates and yields manageable.
In check.
Because if you get into a situation, and this is the thing that I think really bothers stock investors, if you get into a situation where the government can't issue the same type of stimulus and debt that they want to because of interest rates, then you have a problem. Because right now the markets are dependent on that liquidity.
Yes, absolutely. Absolutely. And I couldn't agree with you more. Jeff, before I let you go, what are the opportunities for the week ahead? What are you seeing? Give people at home a few words about what you're seeing ahead, how to stay out of trouble, what to do. What's your guidance in a few words?
We are in very volatile. We are entering into I talked about this on Monday with you and James West on the Monday Outlook. And we are entering a bullish volatility period where we're still, as a market, in an uptrend. The uptrend's not broken, but you're seeing huge ranges. Like we saw yesterday in the NASDAQ down 4%, and then it closed down 50 basis points, almost unchanged. And we saw stocks that were down 10% trade higher. And when you start to see these types of moves in the market, you have to understand that the difference between buying something in the morning and the afternoon is everything. You have to understand that waiting an extra day is sometimes the right move. You have to understand that you don't have to put on everything you want to put on in the same trade. You can do it systematically. You can slice it up. And for myself, use smaller size and just be more patient and more cautious.
And more nimble.
But be very patient. Patience and discipline are really important because you're going to have these moments where you want to just throw yourself against your screen and drain your bank account because you can't believe a stock is so cheap. But invariably, as a professional trader, I was always, if I had that feeling, trained and conditioned, specifically if I had that feeling, to do a little less of what I wanted my full position to be. And my full position would be a little smaller than it should be also because it's moving so much.
Right.
Does that make any sense? So it's almost like the opposite of what your instincts are telling you to do.
Absolutely.
At that point.
The more opportunity the market gives you, the less your position size has to be because there's a higher chance that probability will hit you in the direction.
Correct. And you can trade a lot. You don't have to sit and stuff, and you don't have to get it perfect. And you can make those percentages in 24 hours. You don't have to people don't realize the S&P annualized yields between 7 and 9%.
6% over the last 20 years, actually.
6% over the last 20 years. I'm giving you 100 years background on this.
Yeah.
Right. And so 6%, it's barely outperformed inflation. Right. So, what I just described to you are stocks that are moving with a daily range bar in the double digits.
Yeah. Yeah. So be nimble, be patient, be slow to seek opportunities. Don't put all your eggs in one basket and don't load the boat. And I personally, I'm staying more towards small caps. I think small caps still have substantial upside. I like the relative strength performance between the Russell and the NASDAQ. They held up above the 50-day moving average. So my game plan is very simple. I'm still focused on the smaller stocks. So
excellent.
Hey, this was a great session. I really appreciate your time. If folks at home listening to us, if you guys are finding this interesting, post feedback, post comments, or send us an email. If you're watching this, if you like this video, make sure to subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when we post our next video. And if you're enjoying this video, send Jeff an email. He doesn't bite. Jeff@joyofthetrade.com. That's Jeff@joyofthetrade.com. You can reach me at support@marketgeeks.com. I have several emails. That one will get to me faster. Jeff, this was a wonderful session. I'm sure people at home are very thankful for your time. And I want to wish you the best for the remainder of the week. Good luck with your trading, and I will talk to you later.
Thank you, Roger. Likewise. Take it easy, guys.
Bye, guys.